Thanks for joining David, Kevin, and myself for the educational video for the month of January. Hope you and your family are doing well and hope you guys had a fantastic Christmas and New Year's. I know we sure did. Looking back at 2024, at what we accomplished and looking at what we want to accomplish in 2025 is very important. We always call that a financial health check. I'm going to pass it over to David and Kevin, and they're going to walk you through some of the points with that. But as always, if you have any questions, want to review anything, don't hesitate to give any of us a call. Thanks and take care.
With 44% of Canadians identifying money as their primary source of stress, the best place to start to deal with this stress is to create a balance sheet and a budget.
Creating a balance sheet is a great exercise to do at least once a year. And oftentimes when you update your financial plan with us, we're all doing that for you, taking note of your assets and your liabilities and putting it in front of you as part of a net worth balance sheet. Now, it's something that you and your spouse can sit down and do yourself every year as well, independent of your financial plan. And it's a great exercise to look at periodically. Over time, you want your net worth to be increasing, obviously. If it's not increasing over time, it usually means you're spending too much and taking on bad debt, or your investments are performing poorly. Hopefully not both. Another great thing to do is to create a budget. Obviously, budgeting is not fun, but it is essential to making sure that that net worth over time does in fact expand, because it means that you're not spending too much on things that you can't afford and not accumulating debt. Now, making a budget is not fun. It often means curtailing expenses on some of the things that you'd like to do, the wants rather than the needs, but it is a critical thing for every family, every individual to sit down and review their budget periodically, but especially if you've noticed a trend where your credit cards aren't being paid off or you're accumulating debt on a line of credit and so on and so forth.
Item number 2 on our checklist is to manage your debt. Now, the first form of debt that we want to talk about is actually the worst form, which is credit card debt. If you are carrying a balance on your credit card from month over month, this is something that you need to take care of immediately, as many credit card companies are charging over 20% on any balance unpaid at the end of the month. So as I mentioned, if you have credit card debt that you aren't paying off on a regular basis, this is the area you should tackle first. And there are 2 main ways that we would advise people to try to tackle that debt. The first, as David mentioned earlier, would be to create a budget. Analyzing your monthly inflows and outflows of money will help you identify some of your wants that you're spending money on rather than your needs. And it's those wants that we should try to minimize for a period of time and reallocate that money into paying off credit card debt. Another method is to take a look at, are you actively saving on a monthly basis? Because if you're actively putting money aside at the same time you're carrying credit card debt from a month-over-month basis, this is something that you should take a look at and temporarily pause your savings to then move that money over and pay down your credit cards faster. And then once that is done, you can restart your savings up again. There are other forms of bad debt, car loans, personal loans, unsecured lines of credit. Basically, any debt that you're carrying that has an interest rate of about 7% or more is something that you should take a look at and come up with a strategy on how to pay that down faster. Mortgages and student loans are other forms of debt that have lower associated interest rates. And though you should still be actively trying to pay those debts down, they're not quite as dire to eliminate as the higher interest rate debt that we just mentioned.
Next on our checklist is to automate your investing. Have you ever heard the phrase paying yourself first? Well, it's a motto to live by for those who are serious about reaching their long-term financial goals. It's been proven time and again in studies that automating your investing, in other words, setting up a regular contribution on a predetermined schedule, is one of the best ways for you to ensure that you reach your long-term financial goals, because it'll happen automatically and it becomes second nature that you don't have to think about it. You just start to get used to seeing that money come out of your bank account every couple weeks or every month as you get paid. Now, not everyone can do this. It's ideal for folks who have regular incomes like a salaried employee. Self-employed business owners whose cash flows may be a little bit more erratic as they're completing jobs and waiting for payment. It may not work as well to set up an automated investing plan, but all the same, you should have a goal in mind every year, even if you are self-employed, to have a particular target of savings that you want to reach. And if you can do that on a quarterly basis or semi-annual basis so that you don't have to come up with all that capital at the end of the year each year, that's usually a better way to go.
Next up on the checklist is ensure your family's financial security. If you have children that are dependent on your income, it is crucial for you to integrate insurance into your financial plan. Unfortunately, far too often on social media, we'll see another GoFundMe page started up for a family that has just experienced a death of a loved one, possibly a parent with young kids. And now that family is left behind trying to get the emotional support from friends and family, but also the financial support because they may not have had life insurance to help them through this time. Now, term life insurance is very inexpensive. For roughly $20 a month, most middle-aged adults can insure their lives for a few $100,000, which can be a crucial safety net for your family to have financially should the worst happen.
Next up on our financial checklist for the new year is to ensure that you have created an estate plan. The more assets you accumulate during your lifetime, the more important it becomes to make sure that you've got plans in place so that those assets will be transferred to your loved ones after your death in the manner in which you want. Now, naming beneficiaries on registered accounts like TFSAs and RSPs is an easy way to start this process, but virtually everyone also needs a will. A will is something that dictates how your assets will be transferred to those you leave behind after your death. And particularly for certain assets that you can't name a beneficiary on, like bank accounts and your home, vehicles, it's critical to have a will in place. Especially for families with young children, the will lay out, God forbid something happens to you and your spouse, who will take care of the kids and the money that's left behind until they become adults. And it's just really important to have one in place, because if you don't, the Wills and Estate Succession Act in British Columbia will basically dictate what will happen to your money if you haven't done a will. And that may not be the formula that the government has, may not be what you want to have happen with your money. So it just makes it more costly for those you leave behind, more time consuming than it needs to be. And it may not result in it may not be the result that you ultimately want. So really important to look at that as you do your checklist for the new year as well.
All of the different areas we've touched on today are exactly why we can't stress enough to our clients the importance of building a financial plan and ensuring that it gets updated every 1 to 2 years. Keeping your plan up to date with what's happening in your life is important for a number of reasons that we'll go through now.
The first reason is your financial security. Personal planning helps you achieve financial security by creating a budget, setting aside savings, and managing your debts. It enables you to build an emergency fund, which can provide a safety net during unexpected situations like job loss or medical emergencies.
It also helps you deal with debt management. Personal financial planning enables you to manage your debts effectively. It helps you create a strategy to pay off debts, such as credit card debt or student loans, and avoid accumulating unnecessary debts. Proper debt management can help you maintain a healthy credit score and reduce financial stress.
Number 3 is goal achievement. By updating your financial plan, it allows you to set and achieve financial goals. Whether it's buying a home, starting a business, saving for your retirement, having a financial plan in place helps you stay focused and disciplined in your spending and saving habits, leading to the realization of your financial objectives.
Personal financial planning provides a roadmap for wealth building. By creating a budget, saving and investing wisely, and managing debts effectively, you can build wealth over time. It allows you to grow your assets, increase your net worth, and achieve financial independence.
Updating your plan regularly also enhances your understanding of financial concepts such as budgeting, investing, and managing debts. It helps you develop financial literacy, which is essential for making informed decisions about your money and achieving long-term financial success. As the saying goes, there's no time like the present, and this is especially true when it comes to your investing and your financial habits. The earlier you can improve those habits, the better it will be for reaching your long-term goals.
It's also important to remember that meaningful change doesn't happen overnight. It takes a plan, determination, effort, time, and help from others. Remember that we are here to help you build your plan, navigate market volatility, and strategize so that you are able to deal with anything that 2025 has to offer. But if you do want some extra help or you want to talk to us about updating your plan, please feel free to give us a call anytime.
Take care.